What we wanted to do was kind of start the afternoon off with what we used to do in the morning, which is just a little bit of a reflection on some of the other GELF events that we've been doing. One of the nice things about preparing this program is we get to talk to a lot of e-commerce leaders. We get to hear, who's doing what, where, and in many ways that helps us, kind of flesh out the themes of the day. But as we mentioned earlier today, we really can't do this without the support of our sponsors, and we're glad to have Ben here from Global. One of the wonderful things about this industry is we've seen several generations of platforms emerge, and these guys are one of the newest platforms out there. So congrats on some recent funding too, by the way. We'll hear a little bit more from Ben. I won't spend too much time introducing myself. You've met Jim and I over the years, but what we wanted to do with this session was, to take a realistic view of what people are seeing. So we're going to start by going through just a couple of slides, looking back at the recent years. I think as we all know, and as we've heard from conversations, and we had some great conversations last night at our GELF VIP dinner, 2022 was really kind of the first year post-boom. And so while we had, the huge growth in D2C during the pandemic, we started to see people going back to the stores. What I thought was interesting, we were looking at some data that Zia over at eMarketer and Insider Intelligence had shared, and even back in January, so really just less than a year ago, they were predicting 12% growth. Now, as you can see, that has come down, and I think potentially the most interesting line is that penetration line, which we'll look at. So there was the big shift online, and yet we're dealing with the world of high comp. So a couple other data points. Don't need to tell everybody that we've been facing inflation, and I think I think even Mike mentioned it earlier that with higher prices, we're still seeing at least the percentage growths not be where they once were. Another headwind that I think is also notable is the strong U.S. dollar. Actually had a really interesting conversation during lunch today about the strength of the Mexican peso, actually, which, for those of you that have followed the trials and tribulations of the pesos over the last couple decades, really interesting to see that. Another note too, we've heard as much as China has not been as strong as it has traditionally been, they also didn't suffer some of the inflation that we saw throughout especially some of the European markets. So, we definitely got headwinds this afternoon. We're opening things up. We're going to talk a little bit about what we're seeing in Europe. We have Ben from True Classic, which is truly a classic story because they've faced the same headwinds and yet they've had a tremendous push growth-wise, and international has been a big part of that. Another slide from the eMarketer team that they shared with us. So, we are seeing a lot of mixed data. I know you saw some different data points earlier this morning, but I think what we're seeing here, and just as background on this is, intra-country, so this isn't cross-border growth. But we certainly have seen, less than positive growth rates throughout Europe. However, as you look at the global average of 7%, which I think we've seen 3 or 4 data points that, triangulate that fairly well, it is uneven. There is certainly growth going on in different markets. So for those of you that may have not have caught the earlier slide today, this is some cross-border data that we looked at this morning. Again, seeing some relative weakness in Europe and Asia Pacific. In large part, that's due to the slowdown in China, the zero growth. But again, we continue to see the Middle East come up in the conversations about where we're seeing promising growth. Again, I think you saw several charts where, whether it was Mexico or Canada, good, strong growth in North America.
Let's get Ben to perhaps jump in here a little bit, especially on some of those European numbers. I mean, Ben, please just give a quick introduction. We'll dive into some of the Global slides and case studies a little bit later, but. Love to hear some of your perspective on some of those European numbers, because you were the one saying to us it's very unevenly distributed again. There's still some winners, there's losers.
Yeah, for sure. And it's not, e-commerce is not behaving the same way in all categories. So basically, the biggest biggest miss was rural electronics. I think there is a decline in France and Germany of about 15%. So that was the most hit category, mostly because people get equipped during the pandemic, new TVs, new equipment. They are leaving a bit their home now, so they're probably spending more on some other things. As well, so fashion was more or less flat, and fashion brands have spent a lot of money in Europe to make sure they get a good omni-channel experience, which I think they now have. And so with store reopening, that's, 2022 in e-commerce wasn't that great. It was a full year with a full reopening. So it was different. But as well, we see some great trends in Europe. Second-hand is getting really interesting. A lot of brands have launched their second-hand programs. It's something that Gen Z and Generation Y have really loved. So there is a real need from those consumers. So again, I don't think like Europe is really declining. I think they are looking to, it's more balanced in terms of online and offline, but still we see some good trends, and brands with the right approach will still grow quite.
So have you seen the investment in more omni-channel kind of initiatives?
Yes, definitely.
I know we'll talk a little bit about that later as well.
Yeah, omni-channel is really important, providing the right experience, being able to buy online, try in store, or return to store. Any of the omni-channel experience is usually what the brands have been investing in the last 2 years. Now most of those brands are well equipped, so now they will be looking into some new things like second hand. I think will drive a lot of investment over the next 2 years.
Mm-hmm. What about Kent, I don't know if you want to just talk towards, the cloudy.
Yeah, especially those who've been on some of the speaker prep calls, we've been trying to get a sense for, are we in a recession? Is this a new kind of a recession? Will it be a soft landing or hard landing? And I even think back to the holiday party that we had down here in LA, and I kept hearing from people, well, considering everything, we're doing really well. So I think it's really hard to kind of understand relative to others. And we even spoke with Brian from Seco, who was saying that it's very category dependent as well. So don't know if you're seeing that in Europe as well. Some, obviously we'll get into the luxury shopper, and I think we saw that in Ahmed's deck earlier, that the luxury category is holding up well. But yeah, what are some of the product category and customer segment dynamics that you're seeing from, are we in a recession or not?
Yeah, for sure. Like the luxury segment, and we'll talk about it later, doesn't have, is still growing. Rich people get richer, so it's always the same. But most of the companies still get ready for any type of recession. Numbers are moving up and down. So Europe was supposed not to grow. Finally, they say like it will grow like 3 or 4%, 2 or 3%. So it's all like nobody knows, right? So everybody gets ready for anything that could happen, getting, driving more. They were driven on growth. Now they're more driven on sustainable growth. So they will try to get, a good balance between the spend and the revenue, right? So that's really what we see in most of our European customers.
Yeah, and I think the sustainable growth is probably kind of exactly what we didn't call it this morning, when this idea of doubling down on the core markets, being driven by profitability. It is that more sustainable approach where, example from Manscaped, where they're kind of building that slush fund to pull some of the profits from their better markets and to invest in, the next wave of markets once the timing is right.
Yes.
This is a luxury study that we mentioned earlier from Bain. Another really good story. Can't dive into it as much as we wanted to, but Jim, I think back to when we talk about the early days of GELF. Literally, GELF was born right before the Great Recession. We didn't really get people together until 2014, but we do remember thinking international was going to be big. Along came the Great Recession. But it's going to be a little different this time.
And I think that's the big takeaway, right? I think, the fundamentals are very different, not that we're going to get into the details of them, right now. And I think, especially when we think on the global e-commerce front, the solution sets are so different from that time period. So, I do think that, sometimes, we talk ourselves into it. You know, you've been hearing about the recession coming, you know, and you see the tech layoffs and all that. And yet, you know, yeah, we keep hearing from a number of brands who said, we did okay. You know, you know, our holiday was pretty strong. You know, and even when you hear, you know, like you know, Mike from PacSun, you know, saying, you know, even when our product is more expensive internationally, we've got good demand, right? So that's really where, you know, we feel like, you know, whatever we're entering into, whether it's a recession, you know, or not, you know, just the conditions are different and still very strong, you know, for cross-border and the international. And I think that this kind of data really kind of, you know, bears that out. Yeah, it's going to vary from market to market, and you got to remember that these are obviously up against tough comps from, you know, huge growth, you know, in prior years. But for us, this is interesting to see, you know, some of those green bars, you know, and, you know, we've been doing lots of work in the Mexican market. We know how strong, you know, that's been. We've seen some of the Southeast Asian, you know, data, and certainly the number of, you know, both anecdotes and you know, data from the Middle East, you know, being, you know, very strong, you know, regions. So, right. Ben, I don't know, what are you guys, you know, seeing from Glopal, you know, from a market?
Yeah, we got some data a bit later. I think, again, what's important is really the strategy the brand is having and making sure that, you know, they will scale what works. And then in this case, we'll see a consistent growth. As well, if you get the right marketing tools to create good, you know, SEOs and being really like visible and good branding, you will see definitely some growth. For more, you know, when you're more established in a country, then, you know, you have to probably reinvent yourself sometime to make sure you keep on growing. So that's, yeah, it really depends brand to brand and verticals to verticals, but there is always opportunity to grow.
Yeah, we often talked of the importance of, you know, brand equity, and you heard that from our opening panel again, you know, building brand awareness, investing in kind of the brand, right? How do you guys approach that, you know, with you know, brands you work with that perhaps aren't as well known in a new country? That, you know, is that something that you see a lot?
Yeah, so rapid testing is always a good thing to do. So you will just, you know, if you can quickly launch a site in the right language in different countries with some initial campaigns that are just replicated from your domestic campaigns, and try to see what are the metrics, what are your return on ad spend, what is the conversion rate, what are the different areas where you may lose traffic, and you start from there, you focus on the top ones, and then you optimize step by step. Then usually you can get a pretty winning strategy.
Mm-hmm. Makes sense.
So yeah, again, Latin America, Southeast Asia, I think, you know, this is again from the luxury report. Won't spend too much time on this, just a couple of highlights from here. You know, we did see some strength within Europe, especially Southern Europe. One thing that we heard was that, you know, some of the less penetrated markets, so Spain, Italy, where people were forced online. In large part, they have stayed online. Obviously, there is a return to the store, and you know the lifestyle of shopping is a big part of that. So, yeah, just I think the other data point on this one was in just a reminder that you know, China numbers are still not buoying the whole cross-border. Does that come back? I mean, the early indications are that we're starting to see the Chinese tourists back out again, and that's always been a big driver of cross-border. So this is some of your own data from your own clients, and you know, again, you're seeing this big delta where you're seeing that relative to Asia, Europe, strengths within Europe. Are you seeing that from Southern Europe or maybe even some of the Eastern European markets?
So, yeah, clearly like France, Germany, and Italy are the big drivers in terms of growth in Europe. So those are the top growing markets as well. You know, that's the market in which you can invest, and there is a bit of volume. So that's usually where most of our clients invest. But there is as well great opportunity sometimes in Eastern Europe, where they don't have access to as many brands as Western Europe. So sometimes, you know, they will not be huge country, but they can be very interesting and profitable markets because they will be much cheaper in terms of marketing. So that can be a great opportunity.
Yeah, I think Poland has been the one that has popped up in conversation more than anyone else. Obviously, still a relatively small market.
Czech Republic, sometimes Romania as well can be a good country. So really depending what type of goods you are selling, but those can be really good countries.
Yeah, and then the point that, again, we're seeing this Middle East, we would not have seen Asia Pacific and Middle East almost identical, before the pandemic at all. That would have been a much bigger difference there. Are you seeing anything, we've seen Saudi Arabia, we've seen UAB. Where else in the Middle East? Jose talked about Turkey being a big opportunity back in New York. Anywhere within the Middle East that you guys are seeing?
I mean, it's still mostly driven by the market you mentioned. There is no emerging markets, but overall they are consuming more and more online. For some of our clients as well, what we've done is they open a store in Dubai, and basically their stock was in Europe, and then any order will be shipped to the store. So it was you will pick your item from the store. So it was both achieving two things: online sales and a great, having large inventory available, but as well driving people to the store so they know the stores that was just launched. So that was a very good and successful strategy. And in Asia Pacific, we've seen usually people are heavily investing in Australia, which is not, cost per click is getting really high, while sometimes in Japan and Korea, you can have some very good opportunities, large ones, but you need to be fully localized. So you need to be in the right language and have some have a specific experience for those countries. So it's slightly more difficult, but then when you get there and you get some market response, it can be a very good, two very good markets.
Got it. I wanted to move forward here. We talked a little bit about this return to the store, in many ways, and I think we had a couple of conversations at dinner last night, just the number of American tour. In fact, I think I was talking with Denise and Jessica. The number of hotel bookings for East Coast travelers is way down because a lot of the East Coast folks have just gone to Europe. Is that what you guys are seeing? And the reason we bring that up is because one of the leading indicators of cross-border is the international tourists going, experience, touching and feeling the goods, going back home, ordering them online. You guys are seeing the
definitely.
The
There
return
is a lot of tourists, mostly American tourists, in Paris who came back after basically 2 years with limited travel. They're spending more. And one of the things we see a lot is the new trend is they will do massive purchase in big stores and everything will get shipped to their home in the US.
Got it.
So that's we work with a few department stores in Paris, and that's what they are seeing.
Okay, so we've got some case studies. You're going to walk us through some of the case studies, but help us understand a little bit of the kind of framework that we're looking at here and how you guys work with your clients to kind of move through this attract, convert, delight funnel.
Yeah, sure. So that's a framework we use internally just to show the opportunity to our clients and any brands we talk to. So very often people see cross-border and work on cross-border on the last part, the delight. So try to ship DDP to any countries that you can, which is good for just, you get existing traffic and then you try to convert it. But the fact is, it's not only after the purchase and after the purchase, there is a lot more opportunities earlier in the funnel. So building awareness for your brand, making sure that when you get a buyer on your site, you will convert the buyer as well as you can. So in Attract, it's a lot about your marketing strategy. So make sure your campaigns are in the right language, in the right currency. Make sure that as well some content are adapted to the market you're targeting. Use the right channel. Of course, key channels are Meta and Google, which drive most of the traffic, at least globally. Then you can start looking into some other channels, but to start with, those are enough to build significant amount of traffic. SEO as well is really important. So I'm French, as you can hear from my accent. So when I search, being in France, I will search in French. If you don't have your site localized and in the right language, then you won't appear in the results. So what's really important is to make sure your site get the right language, the right SEO tagging, so your surface, in google.fr or the French version of Google, your surface properly. So that's really important to drive traffic. And then when you get a buyer on your site, They will like to get everything that is they used to have. So the right language, the right currency, local payment method when it needs be, sometimes some buy now, pay later for the higher order values, and a fast shipping, so something which will fit a domestic buyer. So they will believe that it's almost domestic, or it's it's not coming from too far. So those are the key things. But one of the big opportunity, so you can quite often double in post-purchase experience. You can double with the right localization tools, but there is a huge opportunity in marketing when you can really drive a lot of traffic. And very often people will monetize the traffic they have, but they will get an hard time developing their buyer base, which is really where the opportunity is today.
I'm curious on the post-purchase part of, again, the delight, stage. We often talk about, brands really need to focus on, often that post-purchase operational efficiency earlier in their journey, their global journey. What kind of things are you often advising clients on from that post-purchase side that are meaningful differences to the customer experience?
Yeah, no, I think it's good when the brand usually brands. I mean, all of you have developed fairly well in your domestic market, so you should try to replicate what you do in your domestic market. You create an experience, and that experience needs to be similar or the same when you go cross-border. So this means like good shipping, of course, no duty, shipping DDP, having the proper customer service interaction, and as well having the right returns with a good return experience. Depending on your vertical as well, the return can be quite important. So making sure that buyers have the right options and don't struggle shipping, returning the product or exchanging the product. This way they will come back and we will build some good branding, which is really important, I think, not in the first stage of growth, but in the further stage of growth.
Yep. So yeah, tell us a little bit about this case study.
Yeah, I think we got 2 case studies. This one is the first one, so I think it's interesting to see how a big luxury brands manage to scale 15 times their international sales in just a few years. So this brand had presence in many countries and stores. So what they've decided is to, again, we talk about the luxury market. What we have to understand about luxury market, they were not early adopter in the digital experience, right? But they are now catching up. They are investing a lot of money to make sure they provide the best experience, but they don't want to go fully digital. And as well, one of their key targets is the Y generation, who is obviously a digital first generation. So what they have tried to do, they really want to create an omni-channel experience. You can, browse things online, find and try the items in store. You can go back and then finally order online. Or you can just, return item to shop online, return item in store. So they've been investing a lot into creating those type of experience. Then they have usually followed their international expansion, have followed their physical stores, but then they expanded beyond that. So they have quickly scaled from a limited number, let's say 10 countries to more than 70 countries. They've really optimized and scaled their D2C approach. In US, Japan, and China, this one is a European brand, which are their biggest market. And they've also adopted what is called the B2B2C approach in terms of logistics. So basically what they are doing, they got subsidiary in different countries. So they ship all the items from a central stock, or let's say a stock that is like either in Europe or in Asia. And then what they do is that the goods cross the border between subsidiaries, so they pay the duties not on the sale price, but on the intra-group price, which is often the production price. So they make millions of saving in duties as well, which is really interesting. So basically, they have balanced approach country by country, but putting all those things together, having a big task force working on internationalization, really help them to deliver. And those are, it's 15x. It can look like they start from small, but small was already millions, and then they're achieving huge numbers right now.
Is that something that you're seeing a lot of commingling of e-commerce inventories with perhaps the physical stores in inventories? Last year in New York, we were at GELF New York, we were talking about staging inventory closer to that end customer, and sometimes for very financial, reasons as well, but obviously some customer experience, benefits.
So what we see as well is there is more and more clients, what they do, they limit the inventory in store because they know that they basically all the inventory will not go, but they have one big stock in close enough, so either in the region or in the country, and then they will replenish the stores from the central stock using the e-commerce system. So basically, they will place order, and order will be shipped as it's a D2C order, B2C order, but in fact it's going to the store, so the store can have the item available. Or when it's very high-end, what they will do is they will do the same. So if an item is not available today, they might be tomorrow or the day after because they get this very fast supply chain option to do like an e-commerce-like order, but that will help to replenish the store.
So this is a local brand, right?
Yeah, so like different one, D2C, more like health and beauty. But basically, it's a brand we helped, growing in 85 countries, like kind of overnight. But then we really use this rapid testing approach. So launching a lot of countries at first, seeing where the traffic was developing, going with the campaign as well on the marketing side, seeing what the numbers were correct. So then you can just leave the country localized and growing their SEO, while any country that get good performance can be scaled in terms of marketing with always the same target, is to keep the same return on ad spend you have on the domestic market. So, and sometimes, like when you are a US brand, very often you pay there is no higher bidding than in the US. So any bid on a campaign will be cheaper elsewhere. English-speaking countries are usually like on the top of the list just because like there is so many brands bidding there. But when you go to countries with another language or smaller countries, you can have like 5, 10, even more, even 5 or 10 times cheaper cost per click, and then your return on ad spend can be really good. So you can really scale those countries really fast, having your return on ad spend target, but achieving great number.
Mm-hmm. So as far as the return on ad spend, that's pretty much performance marketing, the tried and true search. I mean, are you seeing some of your clients, some of the stuff we looked at today, live selling, video commerce, influencer marketing? Is that something that's still fairly new? Because even this morning, a lot of their examples were from the U.S. market.
Yes, I think it's more, it depends on the country. Of course, if you go to China, you get to do different things, but otherwise it's very difficult to, I think it's when you start to get a very significant volume in that market, then you can starting to invest in some other channels. But having the, like Google and Meta channels are already can bring substantial business. So as soon as you're more mature in some country, yes, you can start. I mean, you can try other channels, but starting with those two is good enough for start.
Just wanted to kind of summarize a little bit. Obviously you guys have worked with different clients at different points along this maturity curve. Anything in particular that you guys are seeing? I mean, you had mentioned DDU versus DDP earlier, something that, that's all we talked about last April, and the first time we've heard somebody say DDP today, so that's, I guess that's a GELF oddity. But anything else that you're seeing, just especially as you're seeing some of these kind of phase 1 brands move into phase 2 and moving into the optimization phase 3?
Yeah, I think, again, it's what is important for any brand is to understand, to look at this framework, country per country or region per region, and trying to understand where they are today, what they want to achieve, and what is their next step. So what we try to do is to position, on a sort of step-by-step approach, where we can see what is your next step and what you should look at. So if you really want to grow your sales, it cannot really happen without marketing, without localization, because then you will lose a lot of conversion. But then as soon as you're phase 3 and you want to look local or be local, then there is a lot of other things you can do. Local inventory or this B2B shipping I've mentioned to save on the duties, and then doing omni-channel if you get some stores already in the country. So yeah, you should analyze country, based on, for each country, where you stand and what is your next step, and then you can decide on the next move.
So you guys are outside. I encourage you guys to go by, say hello to Ben and the Global team. Thanks. We can't, again, bring these events without the support of our senior sponsors. So thank you so much, Ben. And again, congrats on some of the recent funding announcements. So it's great to have you as part of the community.
Thanks so much, Ben.